So just like that, another week is upon us, guys, and we have a lot to break down in this video. We're going to go over key economic events coming up, earnings, charts, stocks that I'm looking at, what I'm looking to do. But before we actually dive into it, don't forget to get up to 17 free stocks for Moomoo, each up to $2,000, guys. The sponsor of today's video. Once you open up your account and fund it with $100, link down below, you get a free share of C3AI stock, which right now is around $35-40, and that's actually exclusive to this channel. And you get 5 more stocks, each up to $2,000. And if you fund your account with at least $1,000, you get 10 more stocks, totaling 16 stocks. And fund it with at least $5,000, you get another free share on top of all the stocks you already got of either Google stock or Tesla stock, guaranteed, guys. And this promo is running out. The clock is ticking. You have 5 more days, so use that link down below, or go to stocksarefest.com/Moomoo. That is an affiliate link, guys, so it does help out the channel. I appreciate you all as always. And with that being said, cheers. Let's dive right into the video. And by the way, guys, my allergies are freaking awful right now. My eyes are itchy. My nose, I'm stuffy right now a little bit. So bear with me if I do sound a little bit awful. That is why. So right now, guys, we have the futures market open because, well, it's about 9:30 p.m. when I'm making this video. So check it out. We have the S&P futures up, excuse me, guys, 0.2%, up around 9.5, 10 points, nothing crazy. And really, the moral of the story is they're up about 0.25% for whatever that's worth. I mean, you guys know this could reverse overnight. We've seen that happen time and time again. But we have the S&P E-mini S&P futures up around 0.25%. We have, let's see here, if I pull up the Russell futures, they're up around 0.3%. Yeah, they're up even more than the S&P, right? You guys see that, up around 6.5 points, roughly, in that ballpark. We have the NASDAQ futures up around 0.3% right now, and the Dow, let's see, up around 0.2%. And again, guys, like I said a minute ago, this could change overnight. We could easily see a reversal, but right now, all the indexes are slightly up after getting destroyed on Friday, which makes sense. I mean, we had a red day across the board Friday. We had the NASDAQ down 1%, S&P down around, let me see, 0.7, Dow down 0.6. We had the Russell down, I think 1.5%, something like that. So it makes sense. We're seeing a little bit of a snapback here, in the futures. And let's see if it, leads into tomorrow morning. Time will tell, guys. So before we actually dive into these individual stocks, earnings coming up, which actually all the companies we're going to talk about, guys, all the stocks we're going to break down, all of them are reporting earnings this week. Before we dive into that, though, let me actually pull up the Safari tab and break down some key economic events coming up this week, not only in the U.S., but in other countries as well. We're not going to go too deep into it, but let's just briefly take a look at what's going on here on Forex Factory. So if I zoom in a little bit, you guys can see, and let me actually make my face a little bit smaller. There we go, guys. You guys can see here on Monday, nothing crazy, nothing crazy there on Monday, but on Tuesday we get CPI out of Canada, guys, which is going to be big. That's projected to be 0.5% month over month. Last month, it looks like it was 0.7%, so that's looking to come down there in Canada. And we have the median CPI year over year projected to be 4% in Canada for the month, year over year number. And last month it was 4.2%. So that's coming down for them. Pretty good sign there. And if we come down a little bit more, it looks like we also have on Tuesday the CB consumer confidence in the U.S. Let me pull this up and show you guys what this entails. You guys can see this measures the level of a composite index based on surveyed households. Coming down here, you guys can see this is pretty much a survey of about 3,000 households. Let me zoom in a little bit more so you guys can see, which asks respondents to rate the relative level of current and future economic conditions, including labor availability, business conditions, and overall economic situation, right? So pretty much that is what that entails. That's going to be about 104 is projected, and last month it was 102.3, so a little bit of a rise there from last month. And coming down a little bit more here, guys, again, we're just briefly taking a look at what's going on. We have Fed Jerome Powell speaking on the 28th on Wednesday in the morning at 9:30 a.m. Let me see what this entails. We can see, due to participate in a panel discussion titled Policy Panel at the ECB Forum at Central or on Central Banking in Sintra, coming down a little bit more, as head of the central bank, which controls short-term interest rates, yada, yada, yada. He has more influence over the nation's currency value than any other person. And of course, this is going to fluctuate the markets most likely. We'll see what he has to say on that day. Again, he's speaking on 9:30 or at 9:30 on Wednesday, June 28th. Coming down a little bit more, we have on Thursday, guys, in the morning, 8:30 a.m. for the U.S. And mind you, this is Eastern Standard Time. We can see we have the final GDP number, which is projected to be 1.4%. Previously, it was 1.3%. You guys can see right here. And if I open this up, guys, you probably didn't know, or maybe you did know, I don't know. But there's 3 versions of the GDP released a month apart. First, we have the advanced, then we have preliminary, and again, final, which is what we're about to get this Thursday at 8:30 a.m. on the East Coast. And of course, if you guys didn't know, usually the earliest release has the biggest impact, which the advanced release is the earliest and thus tends to have the most impact, and the final is, well, the last one to be released. So we'll see how the market reacts to it. I mean, it might not move things, probably won't, to be honest, but again, 1.4% is the estimate. 1.3 is what they did, or is what it was last month, guys. And coming down here a little bit more, anything else, that's pretty much it. Core PC price index, that's coming out on, let's see, Friday at 8:30 a.m. So there's a lot going on, guys, a lot going on, which we'll break down here on this channel as as it happens. So make sure you guys subscribe. And of course, hit that like button if you're finding value. I appreciate you all as always. Without you guys, this would not be possible. This channel, I mean, it would simply not exist. So I appreciate all of you for tuning in as always. So let's break down some stocks, guys, the meat and potatoes of this video. We have a lot of companies reporting earnings this week. And, well, I mean, they're not the biggest companies, but they're still worth breaking down. So let's do that right now. Number one, we have Nike, guys. Big company. Well, I guess I said not the biggest companies. This is a very big company. But other than this, it's kind of, smaller companies, but still important ones to look at, in my opinion. And I don't even want to say smaller because a lot of these are massive. Either way, guys, forget what the heck I'm saying. Number one, we have Nike, ticker symbol NKE. I believe they're reporting earnings on, let me see here. Today's the 25th, so they're on the 29th. I believe they're on Thursday, right? Yeah, that's Thursday after the bell. So they've clearly taken a hit, their stock, that is, which is now down to 109. And a couple months ago, it was at 130, and it was there for a good couple of months. From the beginning of January all throughout pretty much the middle of May, we were hovering around 125, 130, and now we're at 109.50, down around 16-17% from that recent high. And of course, we have a death cross here. We're under the moving averages on the 4-hour time frame, which, well, I guess we're under the 180, and we're slightly above the 50. So we're kind of sandwiched in between. And to be honest, guys, earnings is going to be the catalyst that's going to move the stock. Probably. I mean, it usually is for a lot of stocks out there, is it not? So EPS is looking to be, 61 cents versus the 90 cents last year, guys. So EPS for Nike is taking a hit, and revenues coming in projected at $11.51 billion versus $12.23 billion last year. That's down around 5 to 6%, depending on what the projections you're looking at. In this case, 5-6%. But look, Nike, it's, like a lot of companies, it's flat year over year. In fact, revenue is declining, EPS is declining. That's the reality for a lot of these companies, and maybe that's being priced in to the stock over the past couple of weeks, and I mean probably over the past couple of months. Really, if you guys take a look here on the yearly chart, we can see, or the 3-year chart, the all-time high on Nike's 180, and we're well off that point. You guys can see Nike stock is down 40% from all-time highs. That is a big drop for the overall stock. So for me, guys, looking at this as a trade, I would want to see it take out the 180 moving average here on the 4-hour chart, and 115, which was the high from the middle of this month about 10 days ago. So I'm going to set my alert at 115. Let me do that now. Markets that were above. Let me do that again. If we break out of that point, that's where we could start filling the gap back up to 120, 25. Maybe we start running high 120s towards 130 again. So my alert's set at 115. Earnings coming up on Thursday, I believe, after the bell. Let's see here, guys. Yeah, after the bell. Keep your eyes on Nike. Another one for this week, guys, is none other than Carnival Cruise Line. Look at this, CCL, which has ran up a lot, guys, a lot heading into earnings. You guys can see over the past month and a half, this stock is up from $9.50 all the way to $16 freaking dollars, guys. We're talking a 70% move, 65-70%. That is unbelievable here on CCL. So earnings are, I think tomorrow. Let me see here, guys. Monday. Monday morning. Monday morning we have CCL, guys. So tomorrow morning, no joke. Probably when you're watching this video, even if you're watching it, Monday, they're reporting earnings right now. So CCL is looking to do negative 34 cents EPS versus the negative $1.64 last year, which is fantastic. Losses are narrowing. You got to love that. And revenues pretty much doubled up from last year. They did 2.4 billion last year, and now they're looking to do 4.77 billion, up 98% projected year over year. But the only thing that makes me a little bit nervous, guys, about the stock is the numbers are going to be great, no doubt. We just broke them down. Losses are narrowing, revenues are exploding, but again, the stock's up 70%. Is this already priced in? Are we going to get some sort of a drop after earnings? I don't know. So for that reason, guys, I'm being very cautious here with CCL. I'm going to let the dust settle. I'm going to let it play out a little bit, let numbers come out, and see how the stock reacts. If we do start to slip down towards 13.50, that might be, where I do end up striking. So CCL, I like it here, but again, I think it might be a little bit overbought heading into earnings tomorrow. We'll see how it plays out. Another one we have, guys, is Walgreens Boots Alliance, which has not been doing well at all. You guys can see the stock went down 1.5% on Friday. Overall, it's down about $11 from where it was earlier this year, actually the end of 2022, but still, about 7 months ago, in the past 7 months, it's down 25%. So earnings for Walgreens Boots Alliance, guys, which, mind you, it is in a downtrend, no sign of a reversal. They're on the 27th, on Tuesday in the morning, and they're looking to do EPS of $1.07, which is a lot better than last year's 96 cents, and revenue's also going to grow from last year, $34.25 billion expected versus the $32.6 billion last year. That's going to be up 5-6%, somewhere in there. But guys, you know me, I'm not touching this thing until it starts breaking out of the downtrend, which right now it's not showing any signs of doing that, and who the heck knows when it's going to happen. So the next stock is a very important one, guys, but actually before we dive into it, don't forget to get up to 17 free stocks for Moomoo, guys, the sponsor of today's video, if you have not done that already. Each of those stocks could be valued up to $2,000 depending on how much money you deposit. You can get a free share of either Google stock or Tesla stock, guys, which is running out pretty soon here, and you also get a free share of C3AI stock. Check out the details, link down below, guys. And now, cheers. Let's continue on with Micron stock, which is very important, guys. Ticker symbol MU is very important, and their numbers compared to last year, guys, my goodness, get ready. They are absolutely terrible. Micron right now is down overall about $10 from where it was, around 14-15%. Not that bad. In fact, it's still holding the uptrend. The bulls are still in charge. But when it comes down to their numbers, guys, EPS is looking to be negative $1.57 versus the $2.59 profit from last year. So red now from, compared to the profit from last year. And their revenue, guys, are you ready for this? Projected to be $3.67 billion versus the $8.64 billion from last year. That's down 57% projected, of course. These are all projections, 57% down year over year. That's terrible. That's absolutely terrible. And again, it's selling off a little bit into earnings, which honestly I like. This could be setting up for maybe, let's say they surprise on earnings. They're not that bad. This could be setting up for a strong rebound. But I mean, on the flip side, if earnings are terrible, this could end up running right through this trend line that I just drew, and the uptrend just like that could be broken. But to be honest, guys, from my perspective, I'm thinking more of maybe an earnings surprise, potentially an earnings surprise, and we get some sort of bounce back here, relief rally, whatever you want to call it, maybe back towards the high 60s, maybe 70s again. I don't know. Time will tell. So they're on, let me see the date on Micron's earnings, guys, the 28th, which is on Wednesday. They're after the bell. We also have General Mills this week, GIS, not the most exciting company, but a big one, or not a big one, but, a company worth looking at, right? Which is, sometimes on this channel, guys, we don't talk about the most, sexiest companies to follow all the time. Sometimes we break down boring companies that are reporting earnings, that have news coming up or whatever, and that's the reality of the stock market, guys. Sometimes to make money, or if you want to make money in the stock market, you don't always have to chase the crazy, big, fancy, in the spotlight names. Sometimes in the boring names like this one, potentially, I'm not saying to go buy it, but for example, this or some other companies that a lot of people don't pay attention to, right? That's where, you could find a hidden gem. That's where some money could also be made. It doesn't have to be always in the NVIDIAs or the Teslas or the this or the that, right? It could be in the General Mills. You could make a nice 10, 20% on this. Or if you trade options, you can make way more than that, right? I'm not telling you what to do, but I'm just being honest here and, telling you that you don't have to always look for the fanciest tickers all the time. Sometimes it could be as boring as General Mills, right? GIS, guys, which they report earnings on, I believe, 28th, which is on Wednesday in the morning. They're looking to do EPS of $1.06 versus the $1.12 last year, just down a little bit, not bad. Revenue's actually looking to grow. $5.17 billion is what they're looking to do versus the $4.89 billion. That's up around 5% year over year, and you can see this is trying to hold this trend right here, guys. Buyers are trying to come in. We're trying to hold a higher low. Will we do it? I don't know. So let's see if we start to, reverse above this 50 moving average. If we start breaking 82, 83 bucks, that's where GIS could start to reverse. Let me actually set my alert at $83 right now, guys. Let's do that now. Markers that were above, and we'll see where it goes. And another one that I'm looking at is Paychex, PAYX. Let me pull it up and show you. This is one that's reporting, I believe, on Thursday. Let's see here. Yeah, Thursday in the morning on the 29th. And they're looking to do EPS of 97 cents, up 18 cents from last year's 81 cents. That's the projection, right? And we can see revenue. Well, I can see revenue. I'm telling you it right now, guys. Revenue is looking to be $1.22 billion versus the $1.14 billion last year, up around 7% year over year. Not bad. And this is one that's in a downtrend, guys, which I'm not a big fan of. But overall, if we can get some sort of reversal above 115, that's where I would start to pay attention to it, which is right by the highs from last week and also from a couple weeks ago. So let's see if we can get some sort of reversal here on on Paychex, guys. So the last stock, guys, is MKC, which is McCormick and Company. This is also one of those boring companies, boring stocks that's actually been doing pretty dang well. You guys can see back in, when was this? The middle of March, it was at 70 bucks a share. Now the stock's at 95 bucks a share, and it's up around 35% in just the past, couple months, which is nuts. So their earnings are on the 29th, Thursday morning, which is, in a couple of days from now, and their EPS is looking to be 56 cents versus the 48 cents last year. That's a good increase there. And revenue is looking to be $1.67 billion versus $1.54 billion last year. Not bad, guys, up around 8% from last year. So MKC's been reversing. Like I said, we have a golden cross. We're above the moving averages, but we're a little bit overbought, and this thing is on like a 10-day win streak. I mean, maybe more than that. Maybe we had 1 or 2 red days in there, but look, pretty much ever since, the end of May, so more than just 10 days, we're talking maybe 15 17 days, I don't know. But we've had a crazy run here where MKC's gone from 85 pretty much to $94, $93, guys. That's an 11% move. So maybe a lot of the earnings, the good news could be baked in. I don't know. Time will tell. So for that reason, I'm going to be patient with it. Let the numbers come out. I'm not going to gamble on it, and we'll see how it ends up playing out. So what do you guys think? Let me know your thoughts in the comments down below. Hit that like button. Feel free to subscribe. And wait, before you click off the video, don't forget to get your free money from Moomoo, guys, the sponsor of today's video, which is running out in 5 days, guys. Limited time. Use that link down below or go to StockSurfS.com/Moomoo. Once you guys open up your account and fund it with at least $100, you get a free share of C3AI stock, which is right now, I think, $35-40, and that's exclusive to this channel. And you get 5 more stocks, each up to $2,000. And fund your account at least $1,000, guys. You get 10 more stocks, totaling 16 stocks, and fund it with at least $5,000 on top of all the stocks you already got. You also get a free share of either Google or Tesla, guaranteed, which is just the cherry on top for this promotion, guys, which again runs out in a couple of days. So take advantage. Link down below. And it is an affiliate link, guys. It helps out the channel. I appreciate you guys as always. Like I said earlier, without you, this channel would not be possible. And with that being said, cheers. I'll catch you in the next video.